my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. The most significant feature of this market in recent weeks has been the very significant lows of 2021 at 15,665, which led to the lows of late November 2023, plus this year in January and February, and with some mild finessing the lows of late July and early September in the 15,840 and 15,600 zone. It is this point I feel obliged once again to mention a big descending scallop pattern that I've been going on about now for months, and what it may mean within the near-term universe. So the key level has been and is the lows at 15,840. A significant move below this, and by that I mean you would know it when you see it. A significant break below this would give a potential downside for the descending scallop pattern in the 13,830 zone, which would not be too far away from the potential below for the old bearish half hesitation seen over June and July that eventually never materialized. It still all comes down to what the market has done and even now might still do with the 15,840 zone. First time around, in late July, prices chose to bounce back upwards and during the start of August sustained the bounce. However, over mid-August prices had an issue with testing the June 2021 low at 17,095, and I suspect indirectly the now flatlining long moving average currently at 17,380. This suspicion eventually evolved into mid-July, early September ascending wedge pattern. Then, early 7 weeks ago, prices broke down through the base of the ascending wedge pattern, easily reaching the primary target and close enough to the secondary target for me to choose not to designate it. However, we then saw prices build upwards again, enough for me to draw a late July to mid-September bright red bullish Andrews pitchfork. I said on this 5 weeks ago, and I quote, "It is a nascent one and I'm quite prepared to retire it if it doesn't fit, especially if the support down at 15,600 being so close gives way." End of quote. Now I continued, the one other thing I would like to mention is that we might just form a possible double bottom over the action over July today. It is way early to really consider this, but keep it in the back of your mind in case the 15,600 level, 15,600 July low, holds prices up and we really start to see the beginnings of a pullback up. End of quote. Well, since then the bright red bullish pitchfork has held, even seeing a temporary breach 3 and 2 weeks ago of the upper time, currently at 18,365, which was repaired with all things a horn top made 2 weeks ago. I added at the time 2 weeks ago, and I quote, "Price rise triggered the opportunity for the July to date double bottom. Thus we have a primary target X in the 18,140 area and a secondary hard to reach target X1 in the 18,665 area." End of quote. Since then prices have reached the primary target in the 18,140 area but failed with the advent of the horn top, and especially by the resistance provided by the July 2022 low up at 18,265 in achieving the secondary target, and it will be retired after this commentary. The decline last week has been dramatic enough to push down through the long moving average, the bright red middle time currently at 17,470, the June 2021 low at 17,095, and this week to go below the mauve declining medium moving average currently at 16,880, and the green short medium moving average currently 16,773. And this move lower has been enough to now test the May 2021 low at 16,610 and the key, very key, bright red lower time today currently at 16,570, and which we are currently below. Now it's only 1 day's move below, but should this move lower continue, it will bring to the fore once again the question I posed right at the beginning of this commentary and have done now for months: the future of the big descending scallop pattern. Watch this space. LME 3-month zinc. This is a very busy and colourful chart, and for that I apologise, but all these patterns here do relate to what is going on right now, so let me explain. 8 weeks ago prices drove higher, prompted by a small late July to mid-August reverse head and shoulders pattern, up over the June 2021 low at 28.10, over the broken old upper time currently at 28.50 of the May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 upper bull channel line, then over the short medium moving average currently at 29.22, the medium moving average currently 28.81, a congestion band between 29.58 to 29.65 containing the April 2019 high at 29.58 and the 50% Fibonacci line of the big old 2008-2022 move at 29.65, plus further up the green middle time currently at 30.43 of the February to August bullish shift pitchfork, as well as over the July high at 30.2022, followed by the purple neckline extension of the September to December 2022 reverse head and shoulders pattern currently at 31.38, where the market finally slowed down and halted just shy of the June 2018 high 2 weeks ago at 32.20. It is obvious all this countered quite strongly July's monthly key reversal down. As a consequence of this move up, the potentials I laid out topside 5 weeks ago with the original reverse head and shoulders pattern were reached. So looking back a bit, I said 3 weeks ago about the topside, and I quote, "Prices have moved higher still to now test what I suppose is the holy grail of this market, the purple neckline of the September to December 2022 reverse head and shoulders pattern. This could become a seminal moment, so watch carefully as prices have also formed another pattern, an early August to date bullish halfway hesitation that achieved its topside in the topside target in the 30-60 area, plus another pattern that is still operational." End of quote. On this still operational pattern, I said 6 weeks ago, and I quote, "I've also drawn a new early August to early September bullish Andrews pitchfork, highlighted in bright red, in renewed hope in showing the bullish angle attack of this market." End of quote. Well, this bright red bullish pitchfork has been operational until last week, when we saw prices penetrate and breach the bright red lower time, currently at 31.01. However, the bright red pitchfork is not letting go of its title of the market runner just yet, as prices have sallied backwards and forwards, back and forth, either side of the bright red lower time, not quite breaking it, but not quite repairing it either. This all goes back to what I said 3 weeks ago, and I quote, "The question now is whether the market will falter here, much as it did in late May, or will it really go for the higher price?" End of quote. Over the last 3 weeks, I had hoped to see, if not the answer, then the beginnings of the answer, but so far it has still eluded my gaze. I'd suggest keeping a careful watch on the 29.40 zone below, and now the purple neckline above. LME 3-month tin. Prices started their recent build higher down at the congestion between 28.835 to 29.005, containing the July 2011 high at 29.005, plus the important gold highlighted, slowly rising long moving average, currently at 30.585. And back then, the nearby neckline extension for the October 23 to January 2024 reverse head and shoulders bottom, which is currently at 28.355. And finally also the 50% Fibonacci line of the March 23 to April 2024 move at 27.330. Please kindly note all these, as they will play a significant part in the more recent action. Anyway, all these slowed, stopped, and at the start of August turned prices higher. Pushed back up, then became stuck in what I can best describe as an accidental congestion area overhead, created by the combination of the medium moving average, currently 32.010, and the short medium moving average, currently 32.040. Then also the 50% Fibonacci line of the March 2020 to March 22 move at 31.845, plus the neckline of the thin and tall April base head and shoulders pattern. That one, which is currently at 31.915. Prices were stuck there until 5 weeks ago when they broke higher, moving up over an earlier all-time high from April 2011 at 33.610, and up to the 50% Fibonacci line of the March to October 22 move at 34.175, which they breached but could not break any higher. I said of this 50% Fibonacci line 2 weeks ago, and I quote, "This latter one seems to me to be a significant level, but we'll see." To help clarify this move higher, I drew 3 weeks ago, so that's now 5 weeks ago, I drew 3 weeks ago a late July to early September bullish Andrews pitchfork highlighted in dark blue on my daily chart. End of quote. Now, I was the first to admit that this was not a perfect pitchfork, but the market still utilized it until 2 weeks ago when prices punched down through the lower time. So last week I took the step to finesse this acute bullish Andrews pitchfork to a shallower dark blue bullish shift pitchfork, which you can see today. In last week's commentary, this newer pitchfork worked well, but since then the market has dropped down below the medium and short medium moving averages, as well as the old neckline and the 50% Fibonacci line at 31,845, such that late last week prices breached a dark blue lower time, currently at 31,620, and this week we are on the verge of breaking it completely. What the market is now facing is a test of the previously mentioned gold long moving average, currently at 30,585. This is a key level, and it asks the question of this market whether it will bounce up from it as it did in late July and early August, as well as to a certain extent back in early September, or will it break it and test the late July base congestion between roughly 28,835 to 29,005. There is a lot of overhang in this market, so if it does break, then it may reach down to the previously mentioned neckline extension for the October 23 to January 2024 reverse head and shoulders bottom, currently at 28,355. However, we have not done so yet, so just watch carefully in case it does. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.